Hello, my name is Ernest, co-founder of theprofitroom.com. Don't forget to go to our website and hit subscribe so you can get up-to-date information that we're always trying to bring to you. So how to start investing at a young age? Let's look at it. Money is the world's undeniable driving force. We need some form of currency in order to survive and live, right? So it's crucial that we learn how to invest money or save money. And there's no particular age to start. The younger is the better because you can see a prosperous future, right? Very, very important. A lot of experts say those who start off young, fast tracking the way to early retirement and more stable being financially in this world. Very, very important. Also, it helps you build that discipline because you get used to putting money aside for investing and other things of that nature. So we're going to start talking about ways we can start as a younger person and show how by starting younger, we can get more financial independence as we get older. Very, very, very important. So let's just start with a simple savings account. Even though nowadays savings accounts don't give you a lot of return, but it's good to just have one. Why? Because you're conscious that you have money in an account that you look forward to actually growing, right? So if you're under the age of 18, you know you have to get assistance by a parent or a guardian. But if you're 18 or older, you can start with a nice savings account and also start establishing a relationship with some form of bank or institution. Second, you can open up a brokerage account along with that bank account. There's many different accounts like TD Ameritrade, Fidelity, E-Trade. There's so many different accounts. And you can start investing in what they call index funds. Index funds are a group of funds that have a large rate of return that has the multiple stocks in it from the stock market. We call it S&P 500. Based off of the S&P 500, for years, on average, it has given a 10% return, right? Which is great. So even though the stock market could be very volatile at times, if you're not that educated, you can still put money in the S&P 500 index fund and still anticipate a good return, right? Remember, we're just starting out. We're still young. We just want our foot in the door. Second, there's other funds that are called REITs, that are real estate investment trusts. Now you can get these funds the same way through your bank or a broker. So what's great about the real estate investment trust, these REITs, right? These are like strip malls. You ever go to like a mall or outlet, right? And imagine all those stores that are there, they're paying one big landlord. And usually that landlord has multiple commercial properties and they actually put it into a fund where you can invest in, right? We know property values usually go up over history, right? Because it's hard to find land. This is a great safe place to start building your nest egg, right? Remember, we're just starting, right? We just want to get involved. Another way we can do this is by buying fractional shares of stocks. So there's multiple apps like Robinhood where maybe you can't afford a full share of a stock, like maybe Netflix, that's like $300, but you can afford a fractional share. And maybe on a weekly or bi-weekly basis, you can start purchasing some shares of that stock and eventually you get one full share. Another way you can start is starting a retirement program. Now you're like, listen, I'm young. I'm trying to, live my life now. Correct. But those who start a retirement program early, like a Roth IRA or IRA, and we'll have more videos about that as well, you're starting to build a foundation. So imagine if you're a young person and by the age of 25 have maybe $5,000 or $10,000 in a retirement account. Over the course of years, as it starts to grow and grow and grow, that $5,000 or $10,000 probably by the age of 60 or 50 could be worth over $1 million because it's compounding interest. It's actually growing. Remember, we're just starting out. So the basis of this video is just to be financially conscious as a young person. So if you're a parent watching this, you don't need a lot of money. You can start with a small amount, right? You just want to get your children active and understand that in order for them to be financially stable in the future, they need to start now, right? Start practicing doing small things so when they reach adulthood, they understand it even better, and they can grow and be much more stable and not have to rely on you. Hope you guys enjoyed this information. If you liked it, please hit the like button, subscribe, go to theprofitroom.com, follow us all over social media, and I'll see you in the next video. Remember, education, application, and success.